Which stocks are actually built for the wheel strategy? Not every stock qualifies. Not every ETF either. Pick the wrong one, and the wheel stops working for you and starts working against you. So what separates a stock you should wheel from one you should avoid completely? Let's start with the most important filter. You have to actually want to own it. Not for a week, not as a quick flip. You need to be genuinely comfortable holding this stock for months, even through a rough stretch. Why does that matter so much? Because the wheel strategy can leave you holding shares if the price drops. If you don't believe in the company, that moment turns from a discount into a disaster. So what does a strong wheel candidate actually look like? First, look for steady established companies. Not the newest hype stock, not something that doubled last month for no clear reason. You want businesses with real revenue, a track record, and a reason to still exist 10 years from now. Boring is good here. Boring means predictable. Second, look at liquidity. That's a fancy word for one simple idea. Are people actively buying and selling the options on this stock every single day? If barely anyone trades the options, you'll struggle to get a fair price when you sell, and you'll struggle even more when you try to close a position early. High liquidity means tighter pricing and smoother trades. Low liquidity means you're stuck. Third, think about volatility. Does that word sound scary? It shouldn't. Volatility simply means how much the price moves around. Too little movement and your premiums, the cash you get paid up front, will be small and barely worth the effort. Too much movement and you're exposed to wild swings that can wipe out months of steady gains in a single afternoon. The sweet spot is moderate volatility, enough movement to generate solid premiums, not so much that you're gambling. Fourth, consider dividends. This one's optional, but it's a powerful bonus. If the stock pays a dividend and you end up holding the shares for a while, you're getting paid twice. Once from the options premium, and again just for owning the stock. Isn't that the whole idea? Getting paid from every angle possible. Now what about ETFs? Can you run the wheel on those instead of individual stocks? Absolutely, and for a lot of people, it's actually the smarter starting point. An ETF is simply a basket of many stocks, bundled into one single investment. Instead of betting on one company's future, you're spreading that risk across dozens, sometimes hundreds of companies at once. Broad market ETFs tend to have excellent liquidity, steady long-term growth, and lower single company risk. That makes the emotional side of the wheel a lot easier to manage because no single earnings report or scandal can sink the whole position overnight. So which should you choose, individual stocks or ETFs? It depends on how much risk you're comfortable taking on for a single name. If you want higher premiums and you're confident in a specific company, individual stocks can work well. If you'd rather sleep soundly and reduce the chance of a single bad headline wrecking your position, a broad ETF gives you nearly all the same wheel benefits with a lot less company-specific risk. Here's the filter to run every single time before you wheel anything. Would you be happy owning this if the price dropped tomorrow? Does it trade options actively with tight, fair pricing? Does it move enough to generate a real premium without swinging wildly out of control? If you can answer yes to all three, you've found a stock or an ETF that's actually built for this strategy. Skip the hype. Skip the story stocks promising to change the world overnight. The wheel rewards patience and stability, not excitement. Choose something solid enough that you'd be comfortable holding it, even on the days it doesn't go your way. That's what makes a stock or an ETF wheel ready. Steady, liquid, moving just enough, and something you genuinely want to own. Thank you for watching all the way through. If this helped you think about stock selection differently, subscribe and turn on notifications so you never miss the next video. See you in the next one.